is going on here? This chart shows the last 10 days on the Kuipin platform, comparing the S&P 500 with 1, 2, 3, 4 BDCs that have reported their results recently. Now we can see here the S&P 500 in purple. It's leading the pack here with 1, 2, 3 BDCs, all sort of getting decimated to varying degrees in the last several days as they have reported their results. So we're going to have a quick look at what these results are and what they mean, and ultimately what's going on with these BDCs. So let's get into it. So what's going on here? If we begin to look at the data here, income. So the debt portfolio has generated a net investment income. It's increased 21%, which sounds good. But part of the difficulty here, I think, that the market has fixated on is this issue here. Over the last 12 months, the adjusted net investment income on a per share basis was only 59 cents per share compared to 60 cents per share for the same period last year. Now, when you begin to think about this, this is a very near miss. It's more or less in line in my mind. And it feels like this is what provoked the sharp drop in the value of FDUS. At the same time, the net asset value has grown. Now, if you think about what this means, we're essentially saying, hey, look, they made a near miss on investment income, but the net asset value is growing. And net asset value, in my mind, is what I want to see increase in value. Now, let's try for another company there, Aries Capital, and we'll run the same type of search there. Net asset value, the NAV, increased 6% year on year, which is fantastic. So what exactly was going on here? The gap net income per share was higher than it was in previous quarters, and so that should be good. Although the core earnings per share are down somewhat compared to the previous quarter. So again, not particularly bad, but not particularly, it shouldn't have resulted in my mind in a serious shift in the price or the market expectations of this stock. Gladstone Capital, let's have a look at what they have come up with. An increase in total interest income for the quarter. That sounds positive. Yet investment income declined a little bit. This, again, seems to be something that the market was fixating on, that the net investment income appeared to be declining marginally compared to previous quarters, but the net asset value per share appears to be increasing comfortably as well, though. So again, I think this is what we should be looking at here. 6th Street Specialty Lending. Now, they were clobbered particularly hard, and I'm curious to see, when we look at exactly what's going on here, how bad or how problematic is it? And they've consistently grown the net asset value for 12 and a half years, roughly 3.5% annualized net asset value. And so that sounds positive on general. Now, this seems to be here the other issue for 6th Street Specialty Lending, though, is the adjusted net income per share, 52 cents. And that is a miss as far as analysts are concerned. And again, I feel as though the company's been relatively unfairly punished here, because even though the net income per share is down, the net asset value is up, and doing well. So what I want to do next is I'm just going to switch over to another platform. We're going to look at the net asset value for these companies and see whether or not these are good companies to think about holding, and why the net asset value is important. And Fund Advisors has an absolutely fantastic database here. Now, one of the key things I want to look at here is this growth. Now, we can begin to look at, for example, this line here. Now, this is just the net asset value. We can see it decreased a little bit with the COVID crash, but in general, this has been growing strongly. And we can see as we put price on, the price swings around it. Sometimes it trades at a premium, sometimes it trades at a discount to the NAV. And we can see that in this chart here. Now, if we go back to the main table here with CF data, we can begin to look at some of those other companies. So, for example, Fidus Investment Corp And we can get a sense again whether or not the net asset value is an important part of this company's success. And again, if we take off the other elements, we can see that the net asset value is indeed increasing, just like we saw with Aries Capital. And we can see again, price is often traded here at a discount, but in general, prices again follow the net asset value, which seems to be a good indicator here that this could be another interesting company. Gladstone Capital. We can take the same approach here. We can see that net asset value appears to be a bit more choppy, but it has been increasing. And we can see that price, again, respects or follows where the net asset value goes. Again, it has fairly big swings here, so where it's trading at a great premium, for example. And we can see that it usually has been trading at a premium here. 6th Street Specialty Lending. Again, we can see the net asset values increasing as the company grows, and we can see that the share price as well appears to be following that trend as well. Though here in particular, always apparently trading at a discount, at a premium. Now, one of the important things to note here as well is we can also very quickly look at some of the important elements here. So, for example, the NAV total return. We want usually a company that's doing well in terms of the NAV total return. I often like to see companies with lower leverage here, and as well as that, also a high percentage of first and second lien lending as well. So a company here, for example, like Aries Capital appears to be doing well. They've got a high level of security on their portfolio, and they've returned a good net asset value return over the last several years also. And near the top of the list here is one of my favorites, one of my mainstays, Main Street Capital. And we can see here that it trades at a very, very high premium at the moment. And this is not a company or a stock that I'll be adding to at the moment at this sort of level of premium. But companies like Gladstone are trading at a small premium with a reasonable yield. Fidus is trading at a very small premium, and again has a reasonable yield here as well. So when we begin to look at this, I like to look for NAV returns as a strong indicator of long-term success. But there are, of course, other factors. But in the long term, if NAV, the net asset value, is increasing and the NAV per share is increasing, then we should be on to a winner here. And so if you think about sorting this list in this way, as I move down the list, I'm getting into the bottom of the barrel here. Some of these companies don't have the data here because they're relatively new, but we can see, for example, there's a number of companies down here where the net asset value has been deteriorating. And for example, Great Elm Capital, deterioration in the net asset value. Great Elm Capital, a deterioration in the net asset value. Not something we want to see as an investor, but here again, if we look at how the price has followed this deterioration in the net asset value, we can see again price follows net asset value. So when I'm investing in BDCs, this is why I look at the net asset value. Price follows NAV. Strong NAV, good. Growing NAV, great. To some degree, the dividend yield is secondary to the growth in the NAV. I want to see growth in the NAV, ideally a good yield. And ideally as well, I want to be buying these at a discount where possible, or at least if I'm buying at a premium, not too great a premium.